All right. Welcome, everyone. My name's Tom Buller. I'm the Executive Director at the Kansas Rural Center, and we've got a really exciting session here today where we are talking about farm finance and capital opportunities. If you have questions throughout the talks today, you can feel free to type them into the chat, or if it's something quick and maybe relevant to the slide, you can unmute yourself and ask that question, and feel free to engage with our speakers as we move through it. So we've got a great lineup today. We're going to start off with Josh Ritter, who's the Farm Loan Chief for Kansas FSA. So with that, I'll turn it over to you, Josh.
Thanks, Tom, and I appreciate the opportunity to be here and speak with you all today. I do have a PowerPoint I want to share, so I'm going to try to do that now and see how that works out. It's not quite right.
Looks good on my end here.
Okay, can you guys see it okay?
Yep.
Okay, so yeah, I'm Josh Ritter. I'm the Farm Loan Chief with the Farm Service Agency Farm Loan Programs, and I just want to give you some insight into our programs today. And starting off here, so since this is really with a beginning farmer conference and we have a lot of beginning farmers and ranchers here, I kind of just wanted to start off with maybe a definition of how FSA farm loan programs looks at a beginning farmer statutorily. So for our programs, for our farm loan programs, a beginning farmer is an individual or entity who first, they cannot have operated a farm for more than 10 years. So that requirement applies to an individual and to all entity members of an entity. We also, when we look at a beginning farmer, they have to be somebody that will materially and substantially participate in the operation of the farm. So when we're making loans to people, we're looking at getting people involved that are going to be the operators of the farm. So that's one of our requirements is when we make you a loan, you have to be on the farm doing the work and putting in all the operations. For our FO applicants, which I'll get more in detail about, that's our farm ownership loans and real estate loans, and we'll talk about them a little more in depth here in a few minutes. But for those applicants, a beginning farmer, they cannot exceed 30%. They do not own farm real estate either directly or indirectly that exceeds 30% of the average acreage of the farm in the county where the property is located. So to meet our beginning farmer definition, you can own some real estate, but you can't own more than that 30% of what the average is in the county where the property is located that you're wanting to purchase. And then once again, when we're looking at an entity that wants to be classified as a beginning farmer, all members are either related by blood or marriage, and all members have to meet this beginning farmer definition. Moving on, just want to talk a little bit about our general eligibility as well, some of those requirements. So typically this would include, I kind of talked about this previously, you have to be the operator of a family farm. So when you're getting that loan, you have to be the one operating the farm. You cannot be delinquent on federal debt to be eligible for our loan programs. You have to have a satisfactory history of meeting credit obligations. We don't put a lot of stock into what your credit score is, but we do use credit reports kind of to look at your history of repayment and make sure that applicant has, successfully repaid debts to a satisfactory level for what we need. You cannot have caused the agency loss through debt forgiveness. So you had a loan with us previously and we had to write off part of that debt. You wouldn't be eligible for a new loan. You have to have not had a violation with federal crop insurance. You must be a citizen of the USA, a U.S. non-citizen national, or a qualified alien under applicable federal immigration laws to be eligible. You have to have sufficient managerial ability to assure reasonable prospects of loan repayment. So when we make a loan to somebody, we just want to make sure they have that history or background that shows that they can manage the operation. So they have a chance to be successful with that operation. And some of that's through history that you can provide to us. And we think the ability is there, but you maybe need some more help, then we do offer some borrower training classes for those individuals that you may need to take in order to become eligible. And then once again, for our real estate loans, applicants must have participated in the business operations of a farm or ranch for at least 10 years. So today I kind of want to go into some of our loan options that we have under our program. So we're going to talk a little bit more in depth about our direct operating loans, our direct farm ownership loans, our direct microloans, and then also our guaranteed loan program. So when I talk about direct loans, what I'm really referring to are loans that are processed and serviced by FSA. So the loans are made directly to farmers and ranchers by FSA. We use treasury funds to finance those loans, and then you're dealing directly with that FSA FLP office for payments, inspections, things of that nature. We service those in-house and make them in-house. One thing to keep in mind with our direct loan programs is that applicants must not be able to obtain their needed credit from a commercial lender. So our agency does not compete with commercial lenders for financing opportunities. In fact, one of our goals is to get an operation on solid enough footing and graduate them out to that commercial credit. So if it looks like you can get credit you need from a commercial lender, we'll ask you to pursue that option first. And even when you give us your financial information and we review it and it looks like you meet the criteria of getting commercial lending, then we may even refer you to that commercial lender just to make sure and see if there's a fit there before we continue with our own financing. And for our direct loan options, you would apply at your local FSA FLP office. We have 20 FLP office locations in Kansas, and before we get done today, I have a slide at the end that will show you where those offices are and the contact information for those offices as well. So moving on here, the first direct loan option I want to talk about is our operating loans. And for these loans, we can loan up an amount up to $400,000. And one thing to keep in mind here is that can be one $400,000 loan, or we can have multiple loans for operating purposes, but that maximum amount can never exceed $400,000. So if you have a $200,000 outstanding operating loan to purchase machinery and equipment, then we can make you a second loan, but it would be capped at $200,000, so we can't go over that $400,000 total. So the purposes of our operating loans would include to purchase livestock and our equipment, annual operating expenses. It can be used for that purpose. It can be used to refinance farm-related debt, and it can also be used for minor real estate repairs or improvements that can be repaid over a 7-year period. One thing to keep in mind with our loans for annual operating expenses, we don't have a line of credit program. So when we make those loans, they're 12-month loans that will need to be repaid at the end of the operating cycle, and then we can make it another operating loan for the next cycle if needed. So right now, our current interest rate is 2.375%. That rate changes monthly, but once it's locked in at loan closing, that would be the rate you're locked into for the term of the loan. So it is a fixed rate after closing. And then loan terms can be up to 7 years, depending on loan security type and what the loan's being used for. So moving on to our direct farm ownership loan program. The loan amount under this program is up to $600,000. And the purposes include purchase of farm or ranch real estate, and they can also be used to repair or construct buildings or capital improvements. One thing that differentiates this program from the OL program is that our direct farm ownership program cannot be used to refinance debt. So it's only for new purchases or new construction. Currently, our interest rate is 3%, and we can term those loans up to 40 years if needed for repayment capability. So we have some nice tools there to kind of stretch some of those terms out and help people in need. One of our programs that we have under our farm ownership program is what we call our participation, our 50/50 loan program. And under that program, FSA loans 50% of the financing needed to the applicant, and a participating lender lends the other 50%. FSA's interest rate for under the participation program is 2.5%, and that can once again be fixed up to a 40-year term. Same $600,000 loan limit for this participation loan program as for regular FOs. No minimum down payments are required, and the lender will set their own rates and terms for their portion of the financing. Proceeds under this participation loan program are similar to our regular FO program. They can be used to purchase farm or ranch real estate and construct buildings or other capital improvements. They can also be used to pay closing costs. Under this program, the participating lender will have the first mortgage on the land being purchased, and FSA will be in a second position. We do require additional security up to 150% of FSA's loan amount if available, and that's for our regular farm ownership loans also, and our operating loans. So if we make you a $200,000 loan for something, we can finance it 1-to-1 if needed. But if you have any other assets that can get us to that 150% security up to a $300,000 value, we'll take a lien on those as well. I just kind of want everybody to be aware of that moving forward, because that can be a provision that kind of upsets some people at times, but that's what our statutes say we have to do. So also under our direct farm ownership program, we have our direct down payment program. This program requires a down payment of 5%. FSA's interest rate on their portion of the financing is 1.5%. Our maximum loan term of 20 years for FSA's portion of the financing, so we can term our loan out to 20 years, and we lend up to 45% of the purchase price. Under this program, though, it's important to point out that FSA's portion of the financing cannot exceed $300,150, and that's a statutory limit. And then for the remaining financing, you get 50% of that financing from a participating lender. Their portion of the financing must be amortized for at least a 30-year period and cannot have a balloon payment within the first 20 years of the loan. So we make the lender kind of term their loan out and don't allow them to have any balloon payments till after the 20-year period. So that way our loan's paid off, so that doesn't encumber or hurt that operation more to have a balloon payment earlier on in that period. And to be eligible for this program, you must be a socially disadvantaged applicant or a beginning farmer. We've kind of talked a little bit about the definition of a beginning farmer here at the beginning. I'll mention what a socially disadvantaged applicant, what that means here in a couple slides. So with this down payment FO program, proceeds can only be used to purchase farm real estate. So construction loans are not an eligible purpose under this loan program. The participating lender will once again have a first lien on the land being purchased. FSA will have a second lien. And one thing to keep in mind with this program is FSA does not require any additional security. So we will just take our second lien on that piece of land and move forward with the loan. So this is just a quick definition of what a socially disadvantaged applicant, or SDA, is for our statutory purposes with FSA. So an SDA is defined as a group whose members have been subject to racial, ethnic, or gender prejudice because of their identity as a member of the group without regard to their individual qualities. And this group consists of women, American Indians, Alaskan Natives, Asians, Hispanics, Native Hawaiians or Pacific Islanders, and Blacks or African Americans. One other program I want to touch on here on our direct side is our microloan program. And these are when we make loans for $50,000 or less, and they can be used for any authorized OL or FO purposes. The bonus of this microloan program is it's a simpler application process. We don't require as much information to have a complete application, so that kind of leads to a quicker turnaround in most cases. Interest rate would be the same as our current OL or FO rates. And then the term can be 1 to 25 years, depending on security and loan type. So now I want to move from our direct side to our guaranteed loan program. And under this program, FSA guarantees commercial loans for authorized purposes, and they can be up to $1,825,000 loans. So the thing our guaranteed loan program does, it assists lenders to make loans they other ways may not want to make due to either tight repayment margins, limited security, or other credit concerns. We alleviate a lot of those concerns with this guarantee we can offer. So our guaranteed program includes farm ownership and operating loans. And these loans can be used for the same purposes as our direct FO and direct OL programs. One difference is under the guaranteed program, FOs can be used to refinance debt. So that's a pretty big difference from our direct side. And then also we have a guaranteed line of credit program, which those funds can be used for annual crop and livestock inputs, and we can make that line of credit for a maximum term of 5 years. Once again, under the guaranteed loan program, the loan is made and serviced by a commercial lender like a bank, credit union, or farm credit. FSA guarantees up to 95% of a loss of the principal interest or principal and interest on that guaranteed loan. And then the lender will set their own rates and terms for their loan because it's totally their loan. They're making the loan, they're servicing the loan. They'll be the person that the borrower communicates with throughout the life of the loan. But those rates and terms must be within industry standards. So one other thing to mention about our guaranteed loan program is the fee we charge. And we'll charge a lender a guarantee fee of 1.5% for the guaranteed portion of the loan. And then this fee may be passed on to the borrower if the lender so chooses. One thing to keep in mind is that guarantee fee is waived when the majority of the loan is to refinance a direct FSA farm loan, or the loan is made to a beginning farmer or socially disadvantaged farmer participating in our down payment loan program, which we discussed previously. And that's kind of a brief overview of the loans we offer to people, to farmers and ranchers trying to get started and needing our help. Here's the office locations and contact information for each of those offices. As you can see, 20 offices throughout the state, and they're kind of strategically placed, and then each of those offices services the counties in their service area. So just for example, that office in Sherman, they service Sherman County, then all those surrounding areas of Cheyenne, Rawlins, Wallace, and Greeley. And with that, once again, my name's Josh Ritter with Kansas Farm Service Agent State Office Farm Loan Chief here. Here's my contact information as well. Appreciate the time everybody took out of their day to meet here. And with that, I'll turn it back over to Tom and answer any questions anybody may have.
Great, thank you. I have not seen any questions in the chat. Before I hand it over to our next speaker, does anyone have any questions for Josh? All right, well, hearing none, feel free to reach out and get in touch afterwards if you think of something, or maybe have a more personalized question, I guess. And I'll set up our next speaker here, Paul Burdick from American Ag Credit.
Sure, good morning, and thanks, Tom. Can you hear me okay?
Yes.
Perfect. All right, and does my screen come up okay?
Yes.
Perfect.
That's good.
All right. Well, yeah, just a quick intro. My name's Paul Burdick. I'm based here in Wichita, Kansas, with an organization called American Ag Credit, which I'll talk about here in a minute. My role in the organization is I lead a team of relationship managers who really work directly with our customers, with our farmers and ranchers that we finance. And my team kind of covers central Kansas, and we'll look at a map here in a minute and kind of show you what that looks like. I've been in this business for 22 years, so I've had the opportunity to work with a lot of different types of producers, beginning producers all the way to very well established. So I'll spend just a couple of minutes today going through the slides, talking about who we are and creating an awareness of American Ag Credit and the farm credit system. And then we'll delve just a little bit into the credit side. We'll keep that pretty light though, and try to talk about how we can particularly help you in your role as a beginning farmer. And then obviously time at the end for questions. So I'll start out with who we are. And as I mentioned, American Ag Credit is part of the farm credit system. And I'm sure many of you on here have heard of the farm credit system or are aware of what it is. We don't have a lot of time to go into the whole hierarchy of how it works, but at a high level, it is a cooperative-based lending institution that lends solely to agriculture. That's our only business, so we don't loan to other industries like housing or commercial development, that kind of thing. It's solely ag focused. And then if you bring that down to American Ag Credit, we are part of that system. We're actually the fourth largest farm credit association in the country. We serve 7 different states, but there are other, what I would call sister organizations to us that are just like us that help serve the remaining 50 states. I like this next slide because I like pictures and it helps me understand, kind of who we are and explain that. This lays out the geographic nature of who we are. If you look at the green areas shown there, that's our service territory that American Ag Credit covers. Now, again, if you look at the other areas that are in gray, those are serviced by one of our partner associations that offers similar products and services. So if you're sitting in, let's say, Eastern Kansas, for example, and you say, oh gosh, this doesn't really apply to me, going to be very similar structures and programs that the farm credit associations that cover those areas have as well. Just a few territory facts about us listed there. I won't go through those in detail, but 11,000 ag customers that we serve in that green area. So we cover a lot of ground and work with a lot of different folks in a lot of different ag capacities. I would note that geography mix there that you see is really interesting for the farm credit system, where most associations tend to be very geographically homogenous or centered. We're kind of spread out, and that does a couple of things for us. One of the things is obviously gives us the expertise in a lot of different types of ag, all the way from maybe vineyards and wineries in California, for example, to beef and feedlot production in Kansas, just as examples. But the other thing that it does is really helps us with the diversification of our portfolio. When you think about a lender, diversification is very important. But as a farm credit association, we can only diversify so much because we're just ag. But we, within the ag space, are very diversified. You can see that we don't have any more than 17% exposure in any one commodity, which is really important to us from a risk-bearing capacity perspective, and gives us the ability to work with our customers all through the ebbs and flows that you see in agriculture and the different parts of ag. Break that down just a little bit to the state of Kansas, since I think most folks on here are from Kansas. So obviously we're a little more concentrated in the beef side and the feed crops, field crops, for example, commodity crops. But of that 11,000 customers, about 4,000 are here in Kansas, or about 6,500 loans. So again, just to give you kind of an idea of who we are and our structure. So talk a little bit about benefits of ownership. And the reason we say benefits of ownership is it starts to speak to who Farm Credit is. So I mentioned Farm Credit is a cooperative-based lender. So as a cooperative, all of our clients that borrow money with us are stockholders within the association. And as a stock owner, that comes with some benefits. One of those being cash patronage. So there's a dividend paid every year. I'll show you a little detail on that in a second. Another one is voting. Every borrower, every member gets a vote. And it doesn't matter if you borrow $10,000 or $10 million. Everyone's vote counts and is the same. And then we have a customer board of directors. So of those 11,000 customers, we elect, or the customers elect a 20-member board to serve and really lead the direction of the organization. And to dive into that patronage that I talked about, distribution that we have. And this slide just shows you a little more about the history of our patronage and gives you an idea of the scope of what that is like. If you look there, 163 million was paid back in 2021. So if you remember from a previous slide, our net earnings were 350 million that year. So we paid a pretty significant amount of that back. We basically take our net earnings as a co-op. Part of those go to our balance sheet to capitalize the balance sheet as we grow in loans. We have to do that from a regulatory perspective, and then the rest goes back to our customer owners. The 1% is what it sounds like if you have a let's say, for example, a loan that you're paying a 5% interest rate on. In 2021, you got enough cash back individually to effectively make your rate 4%. So it's a nice benefit of being part of the organization. Just to give you an idea of our solutions that we offer to all of ag, including beginning farmers and ranchers, it's really it's anything from your short-term operating input loans all the way to your long-term real estate loans, and everything in between: livestock purchases, equipment, facilities. We have lease options that work for folks in different situations. You see the vineyard and orchard development, you think not much in Kansas, but we do have actually some vineyards and orchards even in Kansas that we finance. And the structure of those really depends on your needs, and I won't go into detail with those, but anything ag related, we can help find solutions for. Also, I think it's very important to point out, we do have a risk management offering as well. And that goes along really well with our loan products. Obviously, if you're loaning money, it's good to help your clients manage risk. That's good for them and good for us. So we do have a team that specializes in that. And that's anything from your typical crop insurance programs to livestock risk protection. There's whole farm revenue protection products that are out there. And we team up. One of our teammates that works in our customer risk area with clients to help work through their individual needs there as well. So get down to really how that relates, I think, more to this group. As a Farm Credit Association, we do have a mission to serve all of agriculture. We don't just serve big ag or medium-sized ag or small, we serve it all. And one of those parts of our mission is our Young, Beginning, and Small Farmer program, that we do have special products and criteria for folks in those demographic categories. And the way we define that is for young, we call that 35 years or younger. Beginning is 10 years of farming or less, and then small is $250,000 of annual gross or less. Certainly we can finance outside of that, but that's our YBS program. I would make note, and you might want to write down or take a picture of the link there on the bottom of the slide in green. That is a link to some education and training resources that we have available on our Farm Credit website. And there might be some good stuff there that's interesting to you, that's beneficial, that you might want to take a look at. So I'll give you just a second to write that down if you choose to do that. I would point out in our products too, and Josh just spoke about the option of partnering with FSA through either their guaranteed loan programs or their 50/50 or the farmer down payment, I think it is, Josh, program. And we do that quite a bit at American Ag Credit too, to help find solutions for folks. So we do partner with FSA in some situations when it's beneficial to the client. I'm going to give you just a very high level look at what we do behind the scenes to make loan decisions. Certainly this is extremely high level, but just as kind of if you are starting out to know, well, what is American Ag Credit looking at? What's the Farm Credit System look at to kind of decide how they want to loan and what products might suit me and make loan decisions. And at a really, really high level, anybody in Farm Credit will talk about the 5 C's of credit. And I'll lay out what those are and why they're important. So number 1 is character. Obviously, that's a probably pretty obvious one. We want to loan money to folks who have good character, but it goes beyond, are you honest, which is important, but it also goes towards, do you have the business plan that's reasonable, and do you have the capacity from a management perspective to manage that operation and do what you want to do? Capacity is really about just, do you have the ability to repay the loan? Obviously, that's important. Capital gets into balance sheet structures, and we don't have time to go into that, but really your net worth position, and do you have the equity position to fall back on and to kind of weather the storms? Collateral, I think most folks are familiar with that, but it's really the protection of the loan in the case of the default, or what I like to call sometimes the skin in the game. And then conditions are just the terms of the loan and how we structure those loans around the individual risk associated with whatever the project might be. And again, these are all things that we look at. Certainly, it's understood that when you're dealing with someone, particularly a beginning farmer, a lot of times those look different than someone that's well established. And so again, we've got the criteria under the YBS program to kind of address that. Also, just real quick, I would mention, because I think it's so important, and I think everybody on the call today probably is aware of this, but I can't emphasize enough the importance of credit score, and that really wraps in with those 5 C's, particularly in that credit area. And as a kind of a startup operation, a lot of times we do put a lot of weight into that, is what does that credit history look like? And so just have these slides to kind of encourage everybody to remember the importance of that and kind of what goes into the credit scores. Obviously, late payments, lack of credit history, those things can have a negative effect. And really the best practices for keeping that credit score healthy through the credit reporting agencies is just making payments on time, avoiding the bankruptcies, the collections, and high open balances. So I just throw that in as something to think about. Obviously, there's a lot more that goes into loan decisions than that, but it's a great starter and a great thing to be thinking about as you're moving into ag for the first time. With that, I'm going to stop. There's my contact information. Jot that down. If there's anything I can do to help you to answer questions, to get you aligned with the right people in the industry. Maybe you're interested in working with someone in the Farm Credit System, but maybe you're outside of that service area that I kind of showed on the map. No worries, I can help you find the right place there too. But with that, I'd pause and offer up any answers to questions that you might have.
Great. Thank you, Paul. We do have one question in the chat here. Has your risk management team started looking at climate change and the trends towards extreme climatological changes?
Yeah, interestingly enough, we do have risk management folks that are always looking out on the horizon for what are disruptors out in the industry, what are risks that are there. Climate change is a part of that, and along with a lot of other risks that are out on the horizon. So certainly it's something that we look at, and we'll see how that plays out as we go forward in the future.
Great, thank you. And we did have one question that came in just a little bit after I missed the opportunity to bring it up for Josh. So someone came in late and was wondering what the FSA definition of beginning farmer is again.
Yeah, and I'll just share that screen here again real quick. So for FSA, this is our beginning farmer definition. Individual or entity hasn't operated a farm for more than 10 years, will materially and substantially participate in the operation of the farm. For an FO applicant or real estate loans, they can't exceed 30% of the average acreage of the farms in the county where the property is located at the time of the loan application. And then in the case of an entity, all members are related by blood or marriage, and all members are beginning farmers. And just real briefly on that 30% average, you'll just need to get in contact with your local office and see what that number is. And for some of our eastern counties and urbaner areas like Wyandotte and Johnson, just for example, I know it's under 50 acres, but you get more into the rural places. We have some counties that are over that 30%. A number is 600 acres. So it just depends on where you're at. So I would just encourage people to contact their office for more information on that too. So
Great, thank you. Any other questions for Paul or Josh, I guess, at this point? All right, well, not seeing any or hearing any. Thank you, Paul. I'm going to hand it over now for a little bit different perspective. We're going to go talk to a farmer. So Jacqueline Smith from Central Grazing is going to talk to us about maybe some of the ways that she's gone after financing and capital for her operation. So with that, I'll turn it over to you, Jacqueline.
Thank you, Tom, so very much. Good morning, everybody. I am not going to do a presentation, so if I can ask you to turn your screens on, anyone who feels comfortable doing that, I would love to talk to you to your face. And before we get going, I'm not going to make any assumptions here, but there is a lot of female sounding names on this call, and that makes me so incredibly excited. So thank you for showing up. And I want to just tell you about me, and I want to tell you about my journey, because I have been through every single one of those conversations that those gentlemen have been talking about, and I have a lot of information and thoughts about it. So I'm really glad to kind of share those with you and talk about the creative solutions that we as a group can kind of work towards and start developing this conversation. So I'm going to tell you my history, and I'm going to be honest with you. And I don't come from a farming background. I was raised in Missouri, in Southwest Missouri, in a very regional town, so not really connected to agriculture. And then I decided I wanted to get into farming. And so early in my career, I graduated with an art degree from UMKC, decided to get my hands in some urban agriculture, decided that my food system was in such disarray that I needed to be a change in that. And so I decided to start learning about agriculture. And I met my former business partner through mutual conversations, and we decided, she hired me as her nanny. And then we decided to start a business called Green Dirt Farm, which is located north of Kansas City. And we made handcrafted cheeses and then sold them nationally into the market. And as we grew Green Dirt Farm, I saw lots of opportunities and other opportunities and responsibilities for me. And I sold my interest in Green Dirt Farm, and I started Central Grazing Company in 2015. I did that with $15,000 in my pocket. And last year, Central Grazing Company closed on over 2 million in funding from blended capital sources, and we have another $1 million that will be closing in the next few months. So there is other opportunities to grow this movement, and we need to harness that energy because it is calling us. And there is plenty of wonderful ways to work with the FSA and farm lending ag places, but they can get you only so far. And what they don't do is they don't invest in frontline food innovation. And that is what we need to concentrate on. They will get you to the level of getting some ownership of land and getting you the capital that you need for farming equipment, but they don't create markets. And what happens is we can invest in ourselves all we want and get into debt all we want from some of these ways. And then what we find out is that we're placed up against the commodity markets, which keep us in 14 cents on the dollar. So unless we start investing in this innovation that's happening at the frontline food innovators like us, we can't create that new market that's going to allow us to have real innovation happening. We all know, we see it, right? We see that there is a movement happening that is helping to advance a middle tier economy in the farming industry. And that's what we have the capability of harnessing right now. The federal government is putting a lot of money into this middle tier market, and we need to get that for ourselves because that will help us create all of the infrastructure that we need for feed mills, processing units, development of technologies to support new breeds that do grazing well, understanding how land access affects us in a really great way, and start having conversations about funneling that kind of creative information. So the way that we have done it, the way I've done it throughout my career is moving from $15,000 to over 2 million, 3 million, I'm going to safely say this year, is through networking with your friends and your family. I know that sounds terrible, and it is, but it is the way that you do it. You build your tribe and you believe in yourself and you continue to put yourself out there. That's how you do it. And when it's time to have some real conversations about moving you from the thoughts of being a farmer, which is something to be extremely proud of, but then being an agricultural entrepreneur, which we are, that puts us into a different playing field when we start thinking about business creation. And that each one of our businesses, as tiny as they are, have real ability for scalability, the right innovation, the right support, the right conversation, legislation change, and that's what we all have to do at a grassroots level. So I bought my farmland. I own 80 acres. That's all I have throughout this entire process been able to secure for myself is 80 acres. I started with none, so that is good for me. I farm on 400, so I lease other land. I raise sheep right now that goes into the natural food market. I have my own brand, and we sell to wholesale, retail, direct to consumer. We are a national brand. We sell on Amazon. And I primarily at this moment aggregate lambs from other farmers in 5 states. And we work with supply chains throughout those states in order to kind of connect this industry. Again, I started this with $15,000 and we are a scalable business at this moment. That is unheard of, right? But we can do that. That is the work that is going to be required for us. And to have these kinds of conversations where we're putting such diverse conversations together with the FSA and ag credit and entrepreneurs is an exciting place, and obviously a conversation that's very necessary. So I kind of want to open it up to conversation at this moment. If there's anyone out there who has a direct conversation for me, a question for me, how did I have those conversations? What was the next step? What's my thinking? I'm happy to have those conversations. And I just want you to know that there is an organization that we are founding right now. It's called Kansas Growing Commons. And it is a farm. We're building a pipeline for we're building a pipeline, and this is what we're going to call it because this is really highly important, but for frontline food innovators. We want to create this pipeline of technical services and business services that can help incubate in a real powerful way emerging brands to come into the infrastructure and build what's needed to like have some of our power back, to build a regional supply chain that can actually have market access for multiple people. So I have handed that document to Tom. I'm going to request you to go through the email address that's on that flyer. We don't have a lot of information out about this yet. It is in process. It's going to be launched in the next few months. And we're going to be looking for conversations with people who want to scale, who have the desire to step into this call of action. And so please, Tom, if you could send that link out of that flyer, that'd be great. And then keep tuned for a website that's going to happen. So
yes, I'm trying to get that up in just a second here.
Perfect. And then in the meantime, I'm happy to answer any questions.
Hey, Jackie.
Yeah.
Hey, this is Dakota Welch. I think we've met a few times. It's been a while since I've gone to
Nice to see
Kansas
you.
Rural Center. Yeah, you too. I was just curious, has any of your financing avenues been through like a slow money, the peer lending type programs like that? I'm just curious. It sounds like you've obviously gone with some alternative sources. I was just curious if you could share on that.
Yeah, so my first that $15,000 came with my money and a slow money $5,000 loan that turned into another $5,000 loan. And that was literally me putting together like a pitch and then being part of a local community to like pitch my ideas about Central Grazing Company. And I think, Dakota, did you hear that original pitch? I'm not sure if you did, but I wish it was recorded because that would be fun to see now. But
I got to sit in on that one.
yes,
cool.
that was asking for 5,000. I think it was 20,000 I was asking for, and I got 5,000. But that 15,000 was enough for me to buy some labels. It was enough for me to get a processing, and it was enough to buy some cases, and I put it out into the market. And then from that business plan grew the other business plans. And so this has all happened in six years, essentially. So yes, like I'm telling you, those conversations and relationships that you build, talking about your passion, having a very thoughtful and practical plan that is just crazy enough to get people excited about is the way you need to kind of be thinking about this as you're preparing for your own businesses.
So we have some questions in the chat. One of them from Nancy. How many people are part of your farm to achieve all your successes?
Well, I have been a solopreneur until last year when I hired 2 years ago, which I hired my first full-time staff. So it has been this show up until this moment. And now we have 4 full-time staff and 1 part-time. And we are actively hiring to scale our business even more.
Great. Can you spend a minute explaining the term middle tier?
Sure. So we all know where we are as a community. We're in the farmers markets, right? Direct to consumer, selling our neighbors, selling to like the local grocery store, having a CSA, having a farmstead, going to the farmers market. And then there's this whole large corporate structure, which is, the General Mills and the Purdue's and in my industry, it's the brand called Superior, which is a huge lamb business, but there's nothing really in between those two things, right? And so the middle tier is this like void, this open market. And that is a regional supply chain. That's not like a localized, it's a regional reach. And so then we start looking at like where are the populations in those outreaches and how do we build those supply chains that connect them all together? How do we build the infrastructure so we can support the creation of new innovation with brand development? How do we build the literal trucks that move from one point to another point? And then how do we build the fulfillment capabilities and the distribution of that? All of that is open right now in the middle tier economy, all of that. And that's what's really exciting.
Great, thank you. I see Amanda has her hand up.
Hey, so I work with Jackie. I work with a lot of those small local farmers that are immigrants and refugees in the Kansas City area. And, they are growing and selling at farmers markets and busting their butts and also working full time and on other jobs. So of course they would love to scale up and like be a part of that middle tier, but that requires time. And like the ability to have that general, like that first amount of capital to like kind of quit their full-time job to like to expand, to grow. So like, can you just speak a little bit about how you were able to kind of do that, and any advice for kind of how to move into that middle tier if you don't have the ability to like quit your job that's sustaining your family?
I mean, that's the conversation, right? Like that is the void that our ag lending isn't solving. And you can't get that through banks, and you can't get that through the FSA. It's simply, there aren't programs, they're not products that advance that, although there is a tremendous amount of opportunity if they would figure out ways to help provide capital for innovation in the agricultural field that doesn't look like commodities. So that's what it is, right? And so the only way to do that is going through outside investment, that is building what's called a blended capital. So, accessing as many small grants that we can, doing philanthropic outreaches, looking at funds such as donor advised funds, which is or mission driven funds with organizations that provide direct farming, like loans at very low interest, will help provide some of those capital investments that are needed for innovation. At this moment, those are the only sources that are available for that. And you have to network, and you have to put yourself out there, and you have to organize to do that.
Thank you. I think that also there was a comment from Christine in the chat about wanting to expand her cattle operation and needing more land in central Kansas. And I feel like what you just said kind of goes to that also. Like there is that gap that you have to figure out how to fill with the blended capital approach.
Exactly. Blended capital, grants, philanthropic, loans, and equity. Take on partners if you have to, but create real strong exit plans that protect the farmer, right? Like we have to protect the farmer. And I'm just telling you, if anyone comes to you and offers you a loan for 8%, say no. That is ridiculous. Like farmers should be around 2 to 3%, period. I'm going to say that all until the day I die.
All right. It looks like Jackie's got a question. You're muted, Jackie.
Sorry about that. Very inspiring as a single woman trying to work with 200 acres. And can you explain philanthropy a little bit in regards to your blended capital?
Donor advised funds, MRIs, which are mission driven, or PRIs, which are project driven investments, I think that's what the acronyms are usually a group of investors or funders get together and they create a fund that someone manages, and they will do that at a very limited amount of interest. So it's mostly a philanthropic donation, but it might have like maybe a 2% interest on it so that it can pay for some of the admin costs. But they are really looking for ways to utilize their money, their capital, for impact. So they want impact returns, not necessarily return on their investment. They look at it that way. And people with wealth can use that kind of information in multiple different ways. And so it is a really good tool. If someone could locally figure out how to advise this fund that can capture some of that DAFA funds or the PRIs or MRIs, like that is necessary. That I have been able to locate capital through those kinds of investments outside of our area. And I'm just going to say this, and I love Kansas and I am like so supportive, and I think we've got a lot to do here, but I have not have found $1. That's not true. I have found $15,000 of that 2 million that I just talked about from Kansas. So the money's not here because we haven't created it, but we have to, and we can.
Okay, thank you.
Any other questions? I guess we just have a couple of minutes left here. We will have a break for 15 minutes, and then at 11:30, we're going to have a beginning farmer feedback session where we're going to be just trying to get some information from beginning farmers about what you need. Obviously, capital's on that list, so something for the Rural Center to work on. We'll take a break in a few minutes. And I do see maybe Amanda has another question. It looks like Kathy also has the question before we take that break. Yeah,
Just
go
gonna
ahead,
jump
Amanda.
in. Back to the slow money conversation. Is there actually an active group in Kansas? Because I had thought that it had kind of shut down.
Yes, it's unfortunate, but it's gone quiet. And I actually was part of the slow money development group. And I think that if there are new leaders, like we took it as far as we can, and there needs to be some people to like harness this and grow it. And so I encourage like a formation of slow money. And the slow money group, all it is a group of people who want to invest in their local community, having meetings together and pulling money together. That's all that is. And if it takes only $15,000 to get a farm enterprise get started, you can see how valuable that resource is. But it really comes down to you guys talking to your networks, and figuring out who's interested, who has a couple extra $1,000 to like put towards a local farmer who needs to buy a tractor to get to this level, or needs to buy labels so they can have a processing, or needs to like, whatever that processing step is, that you can actually start getting that innovation happening so you don't have to sell to the commodity market. That is literally what it is. Like, put together a one pager, which is just a document that lists your executive, break down your executive summary into like a one pager, put some beautiful photos of your farm on it, and start handing it out to your friends and family. I know that feels awful. But that's what you do. And you believe in yourself to get it going, and understand that you're showing up to have the conversation because it's needed for you to show up and have that conversation. And look at us, like this is a group full of women right here, right? Like this is who's doing this work and having the conversation and understands what's needed. So find your tribe.
Great. Kathy, did you have a question too?
Yeah, Jacqueline, I don't quite understand if Kansas Growing Commons is doing some of this money aggregation that you're talking about, or if you're just, yeah, I mean, because you also are busy with the sheep.
Yeah, I love it.
And the reason I'm asking, I mean, I've talked to Tom before, is I have a little bit of heart in Kansas, but I'm in Oregon. So I'm not going to hand out flyers at my farmer's market about Kansas. People will roll their eyes at me.
I know.
It's already happened. But so
you're used to that, right?
Clarify that.
Yes, the Kansas Growing Commons is just launching in response to some opportunities that are happening in Kansas with photovoltaics that are the conversations with solar and wind that are going to basically reform the Kansas landscape or Midwestern landscape. And it is a way, if conversations work in a way that supports land, which we should be having those conversations as citizens of Kansas and in the farming industry, as we want to protect the agricultural landscape. We need to be making sure that the solar and wind companies who want to put photovoltaics up and continue to invest in agriculture technology so we can farm underneath these photovoltaics. And if we can do that, then it would allow us a lot of really great opportunities for land access, because the technologies will be advancing for a middle tiered economy for farmers who are advancing into those technical stages. So there's a lot that needs to happen about that. And Kansas Growing Commons wants to be the voice. And we are going to be working on creating that pipeline of farmers who want to be part of this movement to create new markets, to create new infrastructure, to have land access. We want to have those conversations, and that a large part of that conversation is capital, right? So
to advocate for farmers' interests. Yes. Underneath the energy producers.
Absolutely. Like, it is not a discussion of solar companies wanting to use agricultural lands, it's the other conversation. It's agricultural lands allowing and hosting those, right? So we will
Got
protect
it.
stewardship of the land, and we need to keep it in agriculture.
And
And-
is that how I would find you? Kansas Growing Commons dot something?
It is not a website yet, but just give it a few months. I mean, it's really hot and new, and it is merging. And right now there is the flyer. There is an email address on the bottom of it, and they're just collecting information of who's interested in the conversation, and then we will be tying that together as we kind of expand it. But so I just want to stress that it's very new, and it's in response to movements that are happening at this grassroots level.
How would one find you?
Well, my company's name is Central Grazing Company.
Okay, got it.
All right, one more quick question before we break. Do you have any recommendations for groups to join in Northeast Kansas?
To join Slow Money or join
Oh, Miranda, you gotta. I'm not sure.
well, if there's anyone
For
interested,
starting out, okay, just beginning farmers.
For farmers or anyone starting out with farmers, really the best thing to do is go talk to your FSA agent. That is the best thing to do. And there are some really great FSA people out there that can help that conversation. And that conversation is going to get you to a really good place, traditional ag lending and FSA. And then to take it from that level to the next level in the middle tier is where the innovation needs to happen. So I highly encourage FSA conversations and ag credit conversations, small ag banks to secure land and capital needed that goes into farming. And then access Slow Money and other creative sources for the scale of the market and the innovation that needs to happen for processing, logistics, technologies. Did I say markets? Yeah, all of those things need to be the next level.
Well, great. Thank you all so much. Thanks to Jacqueline, Paul, and Josh for those presentations. We're going to take a break now until 11:30, and I'll put a Zoom link in here. So if you want to provide feedback as a beginning farmer, you'll head over to a different link at 11:30. So hope to see you over there then, and then we'll have another session in the afternoon. So thanks to all our presenters. Thank you all for joining us. I know I learned a lot, so hopefully you all did also. So we'll see you in a little while.